Hi, everybody. Happy, I believe it is Thursday and also Women's International Month. So welcome, everybody. We have some special guests for you guys today. We're going to talk a little bit about how to be more sustainable in the industry, how to be investable as an entrepreneur, and just understanding the different businesses in the cannabis industry and the aspects of it. So we also have our experts coming on today to share some of their background and insights on those topics. So we do have first off, we have Dotan here, so let's go on and start with that. He is a C Trust founder and CEO of Turnarounds. Is that correct?
C Trust, credit rating agency. Yeah.
Okay.
Recurring.
Yeah. Yep. Awesome. And how do you say your last name?
Melech. If you want to really suffer through
Melech.
it, but Melech will be fine.
Okay. And Dotan is correct.
Yes, that is correct. Thank you.
Awesome. Well, thank you for joining us. We do have two more panelists coming on, and that's Rachel Wright from the Financial Leadership and Advisory Taxation Emerging Businesses from the AB and Finwright LLP. And Mark Collins is the president at High Capitalized and also is a chief financial officer at Grupo Flor. So they should be joining us shortly. If not, it just may be me and Dotan. So I hope you guys enjoyed today's virtual event. And thank you guys again for tuning in. We have other events that go on within the entire organization. So make sure you guys tap into the website, check them out. You guys could also subscribe to the newsletter to get those announcements and updates through your emails as well. And so to warm up the show, let's give a few minutes. It looks like we have some participants in here. Feel free to send some of your questions into the chat and we'll do our best to get to those towards the end. But it looks like it's 1:04. So Dotan, you want to do a little introduction since we have a couple people already on here, and then we can kind of dive into what you think would be best for today's, capital growth and the businesses going on in the cannabis industry.
Well, thank you, Casey. I appreciate having me here on this show. I heard great things about your organization. My name is Dotan Melech. I'm the CEO of C Trust. C Trust is the first cannabis credit rating and monitoring agency. And our mission is to be the standard of measuring risk in the cannabis industry worldwide. Well, that's our vision. And we are in the process of testing and proving and talking to CRBs, cannabis related businesses, getting feedback on our score that we will be releasing here shortly, and we'll be using it as hopefully as a fair environment for both lenders and cannabis related businesses to borrow money, more traditional lending at a lower rate, while meeting a higher standard of operation. So thank you for having me here.
Of course, that's amazing. It seems like you have quite a journey, and we'll dive into that. And I'm sure we'll be able to pull some values and some tips for what we'll go over today. It does look like we have our guests coming in. Give me 1 second while we try to bring them in. Hey, Rachel. Oh,
hi. How are you, Casey?
Good. How are you? How's everything going? I know you're a busy woman. It's Hall of Flowers week for everybody who may not be aware, but she is out and about. So I really do appreciate you giving your time and showing up today. Both you and Mark are exceptional and doing great in the industry. So thank you again for your time. But since we're a little short on time, a little bit behind here, do you want to go ahead and give everybody a little intro? And I don't know if Mark's there with you, and we can do that, and then we can jump in all to the juicy stuff that we have prepared for everybody.
Yeah, absolutely. And so actually, Mark is right next to me. We're both at Hall of Flowers here. I'm Rachel. I am part of the board here at the Chamber of Commerce, which is also a CPA in the industry. And we have 420 CPA, and I'm grateful to be here. Thank you.
Awesome. Well, I hope it looks like a very nice sunny day. And from watching everybody's content, it is popping out there. So I'm sure you're out there giving advice and tips to everybody. So that's what we're excited about today conversation and what we're going to, provide for everybody to learn more about. And so today we want to kind of go through some scenarios for you guys, whether you're dealing with debitors or creditors. I'm going to go ahead and let Dotan kind of take it from here. If you kind of want to talk about the investability, structure, what you guys currently look for. Let's say for me, I'm an entrepreneur. What does that look like for me as far as like if you were my mentor and advice for me to move forward in this crazy industry, I should say?
Well, I think sustainability by definition is reducing your probability of default, right? If you think about it. If you have a low probability of default, you have a high probability of sustainability. So we look at it from a risk perspective. What is the risk and what is the probability based on the current information and data that we have and we look at of you getting into a situation that could cost you more money, legal actions, foreclosure, and some other, undesirable activities that most companies are trying to avoid. So we look at it from that perspective. That's as simple as that, but I'm very curious as to what Rachel thinks about that too.
Oh, thank you. Thank you, Dotan. Yeah, I look at it from the perspective of obviously first an accountant, but also as our clients come in that are business owners. For example, I've had a lot of recent calls lately with investment clients looking for investment, especially in like the Northeast area. And so I try to look at things from the perspective of people first. So number one, who do you want to get involved with as far as from an investment standpoint? We want to look at whether we want to raise debt or equity capital. And then the arrangements can kind of change from there. So we want to look at who you are as people, as a business owner, and who you would be getting involved with. So I actually bring it back to, like, believe it or not, core values. Because the group that you get involved with really needs to align with your core values. Oh, it's almost a soul searching journey when you get involved with investors, whether it be debt or equity. And so I think identifying who you are, what you're looking for, what groups are acceptable for you to get involved with and which ones are not. There's a lot of, I don't want to make this sound bad, but there's a lot of predators out there in cannabis, so we really do have to be careful who we get involved with and who we get in bed with. And that is number one. So if you know who you are, then you know who to avoid and who is the right partner for you.
No, that's so well said.
Yeah.
Thank you.
Agree.
Yeah. All right. Well, let's dive into a little bit of your guys' expertise as far as maybe how to deal with actual, like maybe how the compliance will play a role in an investor's assessment. Maybe explain some strategies to manage the risks and debt. And then what does it look like to raise capital and advertise for that?
Great questions. I would say the two main questions, and thank you, Casey, for that, is, companies that are looking for capital or companies, cannabis companies that are dealing with creditors, right? It's either or sometimes a combination of both. You got to deal with creditors and look for capital. When you look for capital, and I think my friend here, Rachel, said it well, it's either debt or equity, right? So you got to look at your, what is it you're looking for, and tell people that you're looking for it. That's not something to dream about. It's something you need to take actions and go out there and build a plan and solicit and get interest and be active, be out there looking for the right people that Rachel was talking about. But you also have to organize your own house. You have to consult. Don't hesitate to talk to professionals. There's great companies, and we've seen tremendous growth in the industry from companies that came from all sectors that are really reputable, great companies that came to consult and advise and help lead the industry on the right path, so they can be beneficials of traditional lendings, for example, or lower rate, loans, because there's direct correlation between rates and risk. They are together. They're synonymous. That's the same thing. It has to be. If you are high risk, you're going to pay a high price. To reduce risk, you got to organize, you got to consult, and you got to communicate. You have to communicate. You got to talk to your creditors, talk to your lender, investors. They're not your enemy. They believed in you. At some point, you were great friends. Otherwise, they would not invest in you. You have communications about what can we do, reduce cost, increase quality, close stores or close operations that don't work. Make the tough decisions. And you may be eligible for equity. When it comes to debt, you got to ask yourself three questions. Am I refinancing? Am I expanding? Or is this an M&A, right? Because your balance sheet is going to be challenged, no question. And Rachel knows very well that you can report. It's the quality of what you're reporting that matters when you analyze data, not the fact that you know how to put it in the right boxes. So I think there's a lot of work to do there. And we're very excited to be part of making it happen. I think there's tremendous opportunities, and I think the industry should get behind it. That should be where we're spending our energy.
Yeah, that's great advice. I think, when we're starting off, especially if we don't come with a corporate background, or maybe that's not something you're familiar with, or it gets a little bit intimidating, understanding financials. Is this where you would advise maybe bringing on a financial advisor? Is that what those, people would be great for? Maybe Rachel can tap on this. I see a lot of people bringing people on board for those reasons. Maybe they're able to help them navigate in the industry as far as getting financials, operations, and understanding legislative and regulatory and taxes, because, it's one thing to build out a regular business, but when we're talking about the cannabis industry, we're up against the wall when we come with the regulatory and legislative and understanding how to really operate around that successfully, whether you're, expanding or, wanting to start up. So any, tips for that? I know that was a lot of unpacked, but I'm sure you guys can break it down.
Yeah, that was great. Thank you so much. So I guess thinking also about timeline, what is this for? There's different types of investment and financing. Is this more of a bridge loan to accomplish certain objectives, say maybe a build out, and then you may be able to quickly repay it? Or a bridge loan actually might be a little bit better for something like a short-term cash flow issue that you're going to be able to resolve. But remember, the bridge loans would be like really high interest rates. And I'm not a finance person per se. I know enough to be dangerous, so I would turn that over to the finance people. So that, the cost of capital is definitely one of the things to look at. What is the interest rate? Some of the pitfalls that I've seen some companies get into is they get into these high interest rate loans and then they're unable to pay it. So you want to make sure, in light of where you are in the market. So if you're in a newer market, say in the Northeast, for example, you may have a few good years within the market. Don't get into rates that you aren't going to be able to pay back when the market matures. Okay. And so you may be able to pay them now because there's not that many operators in those states. But in a few more years, those high interest rates can actually make or break a business. So I think that's definitely another thing to look at. What are your short-term, is this a short-term loan, a long-term, or is this an actual equity investment? And again, you have to make sure that these are folks that you want to get involved with. Another part that I see happening is people giving over too much equity because they might not feel like they have the right advisors by their side to help them through a transaction like this. So I would really encourage people to make sure that you have good partners by your side, people that actually have been through this before, so that they can look through the LOIs, the letter of intents, and then any kind of deal structure that comes down the pipeline from, definitely from an economic standpoint, and also from making sure that you don't give away too much. So that's what I have on that topic.
Great.
Yeah, no, that's amazing. You always give great value back to our community. You're out there speaking and dropping gems. There's a lot going on when you're building out the business and creating, understanding if you're at like having your financials ready. Did you guys want to kind of talk about what that may look like for somebody who isn't maybe familiar with what that really means, as far as, do you have your financials ready? Because if that's not something that you're familiar with, that may be like, okay, well, what exactly does mean? There's tons of different forms that can be involved in, and maybe they're not there yet and they don't realize that those are things that are missing to really help them keep going.
It's a great question, Casey. I would say hire Rachel. I mean, that's a simple advice. You do need to get someone to look at it, because you can prepare your financials, you can educate yourself up to a point, but there are professionals that have seen it many times over and know what an acceptable financial look like versus unacceptable financial, depending who you're dealing with, right? And I think there are great companies and accounting firms out there that can help you with that.
Yeah, what's your guys' thoughts on receiverships for companies that are big around that? Do you guys want to kind of talk about how that would work, maybe to avoid it or not to avoid it? Is this a positive tool for the cannabis industry?
Can I go back to the last question?
Yes, sorry.
About the financials. I think, I've definitely, one thing I wanted to say about that is make sure your financials, we are a CPA firm, so we actually help a lot of our clients with this. It's financials and investor readiness from that standpoint. Some of the mistakes I've seen is companies going in for an investment with financials that are not ready, and also put them at a higher risk of getting a bad investment situation. And so, number one, definitely work with your CPA or CFO of your company to make sure that your financials are actually ready, and so that you're going to get the best rate and again, the best cost of capital. Some of the mistakes I've seen is people pitching when they're not actually ready. Their financials don't look ready. And so that's actually a classic 101 error that you wouldn't think that some of these companies would have in the industry. These are small and medium-sized companies. But so just make sure your financials are actually ready and are going to get you the best investment deal out there.
Well said. I would add to that, Casey. You have the ability to, and there's a lot of good information out there that you can educate yourself, because if you can't afford it, like the chambers put some great educational platforms. Go and educate yourself, learn how to do it. But also, if you put something bad out there the first time, you may not have a second opportunity. The investors may not want to see you the second time. So the damage is really great. It's not like, oh, let's just throw it out there and see what happens, and we can come back always and fix it. You may not get that opportunity. Investors have very short attention span. The elevator pitch was invented by investors. You got to really make the first impression, the right first impression to make it work. So don't rush and put it out there, because you may not have a second chance.
And I want to echo that. That's a really good point, Dotan. That's an amazing point that people need to understand. This is a small community, even though it seems rather large. The investor pool is semi-small. So once you've ruined that, thank you for pointing that out. You're not going to get a good deal on the next time around, because people already know who you are. Do it right the first time.
Yeah, and time's money, I imagine, for a lot of these investors.
Mm-hmm.
And so give you the time, you got to be prepared. On that note, can you you did say you got to be ready. Can you kind of just briefly, maybe even bullet point what ready looks like maybe P&Ls, licensing, or anything like that? Can you kind of give us a breakdown of that?
Rachel, you want to?
Sure. Well, definitely. People are going to want to look at usually like a trailing 12 months P&L. Profit and loss. They're gonna look at certain key identifiers like EBITDA, earnings before interest, tax, depreciation, amortization. There's certain multiples, sometimes multiples of gross revenue. So you kind of want to know your multiples if folks are going to either come and invest in you, or even like you said, Dotan, it could be an M&A deal at the end of the day, right? It could turn into an M&A deal. So know your KPIs before you go into these types of transactions as well. And just talk to people in the industry. Find out, you can also talk to brokers and find out what businesses are going for, right now. So you know what the multiples are if it does turn out to be an M&A kind of situation. Another thing is, I also see folks going for capital, but they don't have a solid way to use the capital. So they don't have a solid plan on how to execute and use the capital. They just know that they are having a tough time right now. And so they think that if they get millions of dollars, that it's going to fix their situation. But the reality is we have to fix the situation before you go get capital, because it's just going to get worse if you don't have the proper use of the funds. So that absolutely needs to be planned. I'm sorry, that's a different topic. I kind of spun it out into something else, but what do you say, Dotan?
I think it's spot on. I would add to that. I want to know, if I was underwriting or looking at a risk of an operator, I'd like to know that you're managing your cash flow on a weekly basis. I'd like to know that. I think it's so important. It's such a missed opportunity in the industry to utilize this 13-week cash flow model. It's been used. You'd be amazed how many other industries are not doing it well, and it reflects. In my previous life, I was going into companies in distress, doing receivership work, and I can comment on the question you asked. They just don't do it. And when you start thinking, especially in an industry like cannabis, it's agile, it's changing, it's moving fast. You need to be able to move at the same speed of the changes, regulatory and otherwise. Yeah, I think cash flow is a weekly issue and need to be dealt with and scheduled. And the way it works is fairly simple. You have a 13-week schedule, you have your categories, and every time you finish a week, you push out another week. You finish a week, you push out another week. So you always 13 weeks ahead. It helps, I think, a lot of companies reduce their risk and be more effective.
Thank you. I think you've mentioned that before, as far as being entrepreneurship, the importance of self-regulating and having transparency as far as, making sure that we're watching where the cash flow is going, where it's coming in, how long it takes us to get product out, how long it takes to get paid, and just being very involved in that. And so thank you for breaking that down. Let's see, what else do we got? Do we have any questions? Oh, it looks like we may have a question. We are a little bit in here. Looks like we're about 1:30, so it looks like we have a couple more minutes to spare, so long as you guys have time. I know Ms. Rachel and Mark are busy on the streets. Let's see. We do have a question. You guys can both hear me okay with this? Yeah, let's see. Yes. We have a cannabis dispensary startup, consumption lounge with approved plans in San Francisco, the prime location on Lombard Street. We are looking for equity capital for build out. $500,000 for a build out and startup. What is the typical equity offering? Do you recommend to look for existing retail operators or other investors? And what is the prime target for investors? And thank you for that question. Dotan, do you want to go ahead and answer, and then we'll hand it off to Ms. Rachel?
I'm assuming, based on the question, that this is pre-revenue.
I guess we can give answers for both, if not.
Yeah, well, pre-revenue, really the only currency that you can exchange, I would say, is equity for the most part. It's hard to obtain debt unless you have collateral like real estate and some other assets or personal guarantees. I mean, it's not impossible, but you're going to have to give up quite a bit on a pre-revenue model. I think the strategic partnership, teaming up with other operators or other companies that have the resources and the cash flow that may wants to grow and expand, may be one way to go. There's some equity companies, funds, private funds out there that they can reach out to and see if there's a plan. But I would encourage them to build a business plan, a clear business plan, and a model and a financial structure that makes sense, so you can really show through numbers what you're describing. Prime location, you know what the traffic is, you know what pricing you're going to get. You can back it up by similar locations in the area. So build a strong business plan with a good, as Rachel mentioned earlier, with a good use of funds, exactly how you plan on using the fund and how value is being created as it relates to the use of funds. And I think if you have a solid plan, you will increase your probability in finding equity at a reasonable price, meaning give up less, depending on the pre-revenue valuation, and potentially debt if there's other collateral that can be used. That's my 2 cents. Rachel, what do you think?
I think you're more on the finance side than I am, so I'm going to leave it with you.
And he did,
that means a lot.
He did confirm, or they did say it's pre-revenue. So thank you for answering that. We do have another question. It looks like this is from Angela Wright, a New York processor. How best to utilize real estate owned to secure investment? And this is pre-revenue question as well.
Well, there's a question there, and I think Rachel does it have any debt, current debt? Does it have a recent appraisal? Is there any equity? And what's the loan to value today? I think there's definitely a way to add additional debt if the real estate has sufficient equity. And that's probably the best way to monetize or at least attach a piece of real estate as a security for the purpose of building the business. Rachel, what do you think?
Again, I will leave those kinds of questions to you. That is definitely not my area. Yep.
Okay.
Thank you. That was a great answer.
It looks like we have another one here. Let's take a look. How do you recommend entrepreneurs navigate cannabis being illegal federally, but legal in state from a capital perspective? Even basic banking and lending are prohibited with many banks due to the risks. How would you say there is a growing focus on the banking in cannabis?
Well, that's a great question. Go ahead, Rachel.
Yeah, I was going to say, we've been in the industry for a long time. And so we've seen how banking has definitely evolved over the years. There was definitely a time period where everything was in cash. We're fortunate to have a much better banking situation than we ever have had. And obviously, we still have a long way to go. But nowadays, folks can get very reasonable bank accounts, with credit unions and banks, depending on where your area is. Some banks are actually national, but we certainly don't have the issue with banking and that we did years and years ago. So I would say that's actually less of a barrier. Obviously, I think with potential rescheduling, then capital may come in and be able to invest more freely than ever before. But there are definitely folks out there that do want to invest for the right company. And in New York, we see, especially with the card licenses coming in, we see investor groups that are actually willing to invest in those licenses. So I think capital is actually flowing a lot more freely than it ever was. But obviously, we have a long way to go.
Well said, Rachel. I would add to that our great friends at GreenCheck are doing incredible work with financial institutions, building a large network, 150 plus banks. There are currently banks lending in the space. I think that there's a lot more out there that is available to cannabis businesses in terms of banking than ever was, including lending. It's going to take some time to be available to everyone and some changes.
Thank you. We have quite a few going, so I'm going to continue, and you guys can get those answers in for them. Our next one is from Frank Nelstone. What should a founder do if they have no transaction due to being pre-revenue and not having a license to allow for operations pre-launch? Any advice?
It sounds like they're looking for someone to help them with their license application fees and potentially, legal fees and things like that. So it's a little difficult prior to securing a license. I think we need a little bit more information because it's usually once you actually have a license that's when you start looking for capital in one way or the other. And Do-Chan, do you have any other thoughts on that one there?
I would say I agree 100%. I think that the license is the initial value that you bring to the table from a capital perspective, because it has to be a give and take. You have to bring value to be able to receive, because debt or leverage or investment, it's a promise, right? It's something in the future. If you have no license, that means you essentially taking substantial risk. And if the competition is great, you may invest money in trying to obtain a license and lose it because it's limited. So it really depends. Is there limited state, unlimited state? What's the risk? What differentiates you individually as an applicant in obtaining that license that a capital source doesn't have, that will increase their chances of getting a license? That's a question that I would ask as well. Is there a value proposition that you can bring to the table that will spark a conversation? There's a deal to be made in different situations, but it's unlikely that investors will fight for a deal pre-license. It's highly unlikely.
All right, that's some great answers there. Thank you for shooting those questions over as well. We have, looks like 2 more here, and this is from Bruce Anderson. Is there a part of the industry that is better to look for in lending other than others? For example, can you get startup money for a dispensary versus cultivation? Some businesses are upside down with cash flow. Is there any way to get money into the businesses to help them grow?
Sure. So, hi, Bruce. I know Bruce. He's a fellow CPA in the industry. Great question. Yeah. So, I mean, I think it really depends. At the end of the day, when you're looking for capital, getting capital in, if you're getting in retail or cultivation, at the end of the day, again, what Dotan said, which is what's your value proposition? What do you bring to the table? If you have, say, multiple dispensaries who are in great municipalities, that is definitely one value proposition. Another thing is really how skilled are you in the vertical that you're in? So if you are like a great cultivator, a tried and true great cultivator, and you already have a proven facility and you're ready to build out in one of the newer states, then people will be more likely to invest in you. It really depends on management, who you are, what skills you bring to the table, your proven history, and I guess really your ability to sell yourself, really.
Well said. I agree, but I would say, before you go out there and look for more capital to grow the business, fix the cash flow. That's a hard, these are the tough decisions that need to be made. Know what you're good at, focus on what you're good at, and scale what you're good at will yield much better results than doing too many things. Because, I don't personally, that's my personal opinion, I don't believe everybody's good at everything. And I think fixing the cash flow is a priority. So I guess, Rachel, you and I can keep going back and forth. I think we lost Casey.
Oh, no, I'm still here. I'm sorry. I'm just reading the questions. We've got a few more. I didn't want me to stare into the camera while I was reading, but I'm here. Okay. So you're good. We have, this is just an anonymous attendee. Do you have advice for strategies for raising capital for business that has existing brand and intellectual property, trademarks, trade secrets, copyrights, some assets, equipment, and inventory, but does not have a license? Is there a particular structure that would work best for these type of businesses?
I would say it's a good question. It's interesting because I had to sell IP in receivership, and I was struggling with what is the worth of the sale of IP as a standalone, right? So I was dealing with that dilemma. We did end up getting it sold for what I would call fair market value, right? By definition, is I'm selling and someone is willing to pay X. That's the fair market value. So it's hard to tell what IP is worth. And again, it's back to someone believing in the value. The best way to move IP and some other brands and some ideas that you may have is talk to existing licensees that may look into expand their brand and grow their IP because they got the cash flow. And there's some great companies out there that I don't think are celebrated enough. But you can advertise to the market with the licensees that have it, have a business, have cash flow, and they may be your natural buyer.
Great answer. Ms. Rachel, did you want to tap on that?
Oh, no, I think that was a great answer for sure.
Thank you.
All right. Well, that was our last question so far. Again, this will be pre-recorded. It will go up on our YouTube channel. So for anybody else that's on here, please make sure you guys check it out. You guys can get in on the answers and comments and make sure you guys like that video. But make sure you guys stay connected here as well with Dotan and Rachel. If you guys are looking to get more questions for yourself personally, just make sure you guys follow them. All of their descriptions and links will be in our description video as well. So I think that will be it for today, you guys. I really appreciate you taking, time out of your day to share some insight with our community and help us grow all together in a better way, and just look forward in a more positive light as far as the community goes into this crazy time for the cannabis industry. It looks like we may have one more.
And thank you, Casey. You're amazing MC over here, moderator.
Thank you.
Thank you.
I second it.
Oh, we do have one question that's straggling before I let you guys go that I think would be a great question that kind of gives a broader spectrum. What do you guys think of Truliev's move? Do you know any context behind that?
Yeah, I mean, well, that's definitely a long question for sure. So, I mean, I guess I've talked to folks and like a couple tax attorneys and think it's a good move. Nobody exactly knows what's going on with that case. I guess there's a lot of conjectures. But I guess you could like file a protective order on saying that you might not be subject to 280E based on different court cases. To be honest, I haven't had a chance to dive into it too much. I've been in the middle of tax season, but all I know is that there's a lot of unknowns. There definitely are moves to be had in this situation if you're a cannabis operator. So there's a couple of tax attorneys I'm working with who actually have some great ideas here, and I would say that would be in their arena to maybe talk to. So if you're wondering who they are, you can reach out to me, and I am happy to refer you over to them. So we'll see. Yeah.
I'm still studying the matter. I'll get back to it.
Great answer.
It's time will tell. If we have a minute, I'd like to take this opportunity to invite anybody on the call, part of the chambers, to our project in getting our score out to market. They can participate if they would like by reaching out to me directly at DYM. D as David, Y as Yellow, M as Mary at ctrust.io, or send me a direct message on LinkedIn, or just post on this video when you put your post out there. We'll reach out. Would love to help and celebrate the great companies and getting them introduced, or at least have the opportunity to be part of this project to get financial institutions to take our credit score and help companies get traditional lending. So we're happy to help. And it'll be great. It's a great project.
There you go. You guys heard it. Make sure you guys reach out to Dotan. That's an open invitation. And again, we are at 1:45, and I know you guys are out and about, so we don't want to take any more time here. We will go ahead and wrap it up. Miss Rachel, you want to go ahead and just do a quick little end as far as where they can find you as well?
Sure. You can find me at rwright, RWRIGHT, at AB Finwright, Apple Boy, F as in Frank, I, N as in Nancy, Wright, WRIGHT.com. And you want to check out 420 CPA as well, a CPA firm that's been in the industry since 2009.
Yes. All right. Thank you, Ms. Rachel. Thank you, Mr. Dotan. I appreciate, again, both of your guys' time, and everybody for for tuning in today. Make sure you guys check out our website. That's the Cannabis Chamber of Commerce. You'll be able to check out all the upcoming events. We do have one coming up that we are supporting. That's the Veterans Ball, and that's presented by the Battle Brothers Foundation. So make sure you guys get tickets to that and join the party here in SoCal. And I think we have a couple other ones that are pre-parties to the MJ Unpacked at Hard Rock coming up. There's a few different ones coming up. So make sure you guys tap into the website and subscribe to the newsletters to stay updated on any announcements. But that's all we got today. Enjoy your guys' afternoon, and thank you again.
Thank you, Casey.
All right. Thank you, guys.
Hey, Rachel, enjoy. Thank you.
Okay, definitely. And also join the Chamber of Commerce. We've got amazing things going on here. Great community. Keep us, more membership keeps us going. So thanks so much.
Thank you.
Thank you, guys.
Thanks. Take care, Dotan. Thank you.
Take care, Rachel.
Bye, Casey.
Bye.
Thanks.